All right, let's jump right into it. Today we're looking at a fascinating story of contrast from a real titan of the tech world, Tokyo Electron. On the very same day, they put out two key documents. In one hand, you've got some short-term pain, and in the other, a really bold long-term game plan. So let's dig in and see what's going on.
And that idea right there, that's really the core of what we're exploring today. You know, it's so easy to just get lost in spreadsheets, but we're going to look deeper. We're going to see how a global giant handles pressure, not just with numbers, but by investing in its vision and, more importantly, in its people. First up, let's check out that report card.
Okay, so picture this. It's July 31st, 2025. Tokyo Electron drops its latest financial results. You can basically think of this as their first quarter report card for the fiscal year. And this is our first real clue, our first peek behind the curtain to see how this absolute behemoth of a company is actually doing. And here it is, the actual financial summary, straight from the horse's mouth. Yeah, I know. It looks like a wall of text and numbers, and it kind of is. But trust me, the entire story starts right here. We're going to slice through the noise and pull out the key figures. And let me tell you, they paint a pretty surprising picture. All right, let's get straight to the good stuff, the headline figures. And what's so interesting about this is that right away, the numbers start telling a story. But it's a story with a twist you might not see coming. So first up, net sales. We're talking a massive 549.5 billion yen just for the quarter. I mean, wow. On the surface, you see a number like that and you think, man, things are looking absolutely fantastic. But, and this is a big but, here comes that twist I mentioned. Even with those soaring sales, the company's operating profit, it actually fell by 12.7% compared to the same time last year. So let's get this straight. Way more money is coming in the door, but less of it is actually ending up as profit. So what in the world is going on here? Okay, let's put these numbers side by side so you can really see it. Check this out. Net sales up an incredible 41.7%. That's just phenomenal growth, right? But then you look at operating profit and boom, it's down 12.7%. And the bottom line, net income, is also down by 6.6%. So the company is absolutely crushing it on sales, but its profitability is actually shrinking. It's a total classic case of mixed signals. So that leads us to the billion-dollar question, or I guess in this case, the trillion-yen question. Why? How do you sell so much more stuff only to make less profit? Well, to figure that out, we've got to zoom out a bit and look at the bigger picture, the global market forces that are at play. And the company actually talks about this in its own report. This right here, this really shows the two-speed world that Tokyo Electron is living in. It's like they're in a tug of war. On one side, you have these serious headwinds trying to slow them down. Global economic pressure, high interest rates, the usual suspects. But on the other side, you have these massive, powerful tailwinds pushing them forward. We're talking the explosive demand for AI chips and huge investments in next-gen memory. They are literally being pulled in two opposite directions at the same time. So when you're caught in a situation like that push and pull, what does a smart company do? Well, you have to be realistic. You have to adjust your expectations. And that is exactly what Tokyo Electron did. They went ahead and revised their forecast for the whole year. So they trimmed their net sales forecast by almost 10%, down to 2.35 trillion yen. But look at the operating profit forecast. That got a much bigger haircut, a cut of over 21%. What they're basically doing here is signaling to the entire market. They're saying, hey, everyone, listen, the AI boom, it's absolutely real. But so are these economic challenges. Making a profit is going to be a lot tougher this year. Okay, so there you have it. That's the report card. A real mixed bag, right? A story of sales going through the roof while profits are shrinking. But hang on, because this is where the story gets really interesting. Because on the exact same day that they dropped all these numbers, they also announced their game plan. And that's the real question, isn't it? When the forecast starts to look a little cloudy, when profits are getting squeezed, what do you do? Do you slam on the brakes and cut back on everything? Or do you double down and bet on the one thing that can actually invent a way out of the problem? Well, Tokyo Electron's answer is pretty clear.
they're doubling down on their people. They announced they're continuing their global stock incentive plan. Now, in simple terms, all this really is a program to give employees and executives actual shares in the company. It turns them from just workers into owners. So how does this whole thing work? It's actually pretty clever. Okay, step one. The company sets up this special account, a trust, and it's basically a vault that holds company stock. Step two, employees and execs get awarded points. Think of them like loyalty points, but they're based on your role and how well you perform. And then step three, once you meet certain requirements, poof, those points convert into actual shares of Tokyo Electron stock. It's a super direct way to link your personal success with the company's long-term success. So now we have the two main pieces of our puzzle, right? We've got the challenging financial report on one side, and this really interesting people-first strategy on the other. So let's put them together. Let's connect the dots and see the bigger picture they're painting. And this quote right here, it's pulled from their official announcement, and it really says it all. This isn't just about a bonus check. No way. It's about culture. It's about getting everyone in the company, from the C-suite all the way to the key engineers on the ground, to start thinking like an owner, to focus on the long-term health of the company, especially when things get tough. But you know what's most telling about all of this? The timing. The fact that these two announcements, the tough numbers and the big bet on their team, came out on the exact same day. That is not a coincidence. That's a message. They are intentionally showing you both sides of the same strategic coin. They're saying, look, here's the challenge we're facing today, and over here, this is how we're going to win tomorrow.
So when you put it all together, you realize this isn't really a story about a struggling company at all. It's a story about a company making a very deliberate, very strategic choice. They're looking everyone in the eye and acknowledging, yep, profits are going to be tough in the short term. But in the very next breath, they're making this huge public bet on the people who they believe will guarantee their future.
And all of this brings us to a really central question, not just for Tokyo Electron, but for any leader, any investor out there. When the market gets shaky and uncertain, where do you place your bets? Well, Tokyo Electron's answer couldn't be clearer. You bet on your own team. So is that the ultimate power move? It's a fascinating strategy for sure, and it sends a really powerful message about where true lasting value really comes from.